Okay, Nasara has got your first question in. Okay, I think we're going to have to address this. So today, my plans were not to talk about crypto. Having said that, my crypto, everything is everything's happening today. So I will briefly talk about that. But in fact, what time is it? It's almost 4. So the plan today is to talk about mistakes, and more importantly, the learning nuggets that you derived from those learning or from those hiccups, those big old mess ups that you've made, etc. Because I wear my errors and hiccups proudly. I love it. I love it. Not, I don't like failing, but obviously I love extracting the learning points from failure, which is why you must always do fail, learn, pivot as fast as you can. But before we get into that, I think I'm going to appease the general consensus, and we'll talk a little bit about crypto. Annoyingly, so I'm still not too much of a fan of Clubhouse because I need visual aids. I need to show charts. I like to draw pictures, and that's how my brain works. So I'm a bit of a mind farter, and I can barely struggle to coherently get sentences joined up. Right, 1600, let's crack on. Okay, Nasara, your first question. She says on the Facebook Live, "Hey Siam, what on earth is the future of Bitcoin now for the next few weeks?" So no one has a clue what's going to happen to Bitcoin tomorrow or next few weeks. I mean, it's too short a time frame. It's actually with something like Bitcoin, it's a lot easier to sort of extrapolate the future, like in the medium to long term. So I'm insanely bullish in the medium to long term, insanely bullish. But short term, anything can happen. And I have been very antsy over the last couple of months. So being a trader, I get very nervous when things go vertically up. Very nervous, because I just know there's always at least going to be a 50% pullback, depending on what market, not necessarily with stocks or big assets. But there's always a pullback. Like a 20 to 30% pullback is pretty average when you have something that goes vertical. So obviously, as Bitcoin's just gone nuts, I have been calling out a big old pullback for the last week or so, and I did start taking profits off the table, which is good. How low will it go? I can't see it being low. So the two models, in fact, I'm going to make a proper video on this for YouTube, but the two models I've looked at for a long time now, for a good number of years, is the stock to flow model for Bitcoin, or cryptos in general, but mainly Bitcoin, and also the logarithmic regression curve. Now, when you look at both of those things, we're looking at peaks in this cycle of around 100, or anywhere between sort of $80,000 to $130,000 per Bitcoin. And we're nowhere near the sort of the overbought territory yet. So what's happened is we've only just crossed the mean in the logarithmic regression curve. So yeah, it's still massive to the upside. So what happened last night and also today, I bought in. So I put another $100,000 into crypto, into the dip last night. Annoyingly, it kept on falling a little bit today, but hey ho. And I also have now borrowed more. So with Aave, with the Aave lending platform, you can actually literally just park up your crypto funds, and then you can then borrow a percentage of that. So you can borrow, or you can borrow up to 80% of whatever you park, but that's not recommended because you could get liquidated. But yeah, so I'm borrowing the dip. So people are buying the dip, which is what I've done, and I'm going to borrow the dip as well. So I parked 75 Ether into the Aave lending platform, and the first borrow because I'm going to do two borrows. So the first one I did is I borrowed, I think it was 30. Shit, I can't remember. I literally just made the video. I think I borrowed like 25 Ether. No. Sorry, it's $22,000 worth of Ether. Standby. Divide that by, God, I forgot what the price was at the time. Yeah, so I borrowed 15 Ether. That was it. So I borrowed 15 Ether, And if it keeps on falling, like over the next week or two, I'll then borrow another 15. So the total goal is I'm going to borrow 30 ether. And that ether, you get use of it straight away. So yeah, that's pretty interesting. Again, on Clubhouse here, if you want to pop your hand up, if you want to speak, etc., please just pop your hand up and I'll give you the mic. So, Nasara, answer to your question is, I'm not sure. It could go up, could go down. Ultimately, I don't really care. Even with the massive sort of pullback today, I think 20% across the board, my whole portfolio is still 170% up over the last 30 days. So, like, it really doesn't bother me. These are just more buying opportunities. So Matthew, next question, has said, "Hey Simon, I'd like to know what you think about prop trading firms like FTMO and Audacity Capital." So I've not heard of Audacity Capital. However, I'm not a fan of FTMO. They are highly misleading. Mind you, I've got to be careful for slander here. I don't want to slander them. Just look at the small print with FTMO. That's all I'm going to suggest. Because what happens is the typical model, so for those who are not familiar with that, there are companies out there, there's loads of them, they all do the same tricks. They go, hey, come and trade, become a professional, fully paid trader, and we'll give you £50,000 to trade, or £100,000, etc. And so what happens is they give you a dummy account for 6 months, and they say, look, if you hit certain targets or a certain target by the end of the 6 months, or every month over a 6-month period, we'll then give you £100,000 to trade, and you'll get a profit share, like 20% profit share, or whatever it may be. But when you look at those hurdles, and that's what they are hurdles, they are egregious hurdles. And when you look at them, it's encouraging traders to make massive trades, like breaking all sorts of good trading rules, and so you're having to push the boat out there. And so even if you do get the and you win, you then have to stump up a chunk of capital. So if you lose any money, it's taken out of your stuff, your account first, and you have to pay a fee. So you've got to pay like £250 a month. But even then, you're not necessarily, they say you're trading a live account, but there are other firms out there that have been caught with their pants down, where they've supposedly funded people with 100 grand accounts, but they're just 100 grand dummy accounts. And because all the traders have to maintain those hurdles, if you don't maintain the hurdles, your account size is dropped and you still have to pay the fees. So I'm extremely cautious about all of these, we'll fund your account type things. So just be super pedantic on the small print. And the reason I know all of this is because for my own trading company, the Realistic Trader, I was very close to doing funded trading, become a funded trader, so to speak. But it just doesn't it doesn't make sense. It doesn't make financial sense for the company at all. And so the only way you can make that business model work is if you screw over your funded traders, and that's what I don't want to screw anyone over, so I didn't pursue it. And Matthew, he said all general prop firms. So prop firms are somewhat of a dying beast. They're coming few and far between. But even then, it's still it's a raw deal. If you want to become a prop firm, most of them are in London or Cambridge. Actually, they're moving out into the suburbs these days for less rent, probably. But you will again have another 6-month trialing period, which is standard. I mean, if you're going to give money to someone to trade for you, you're not going to just give it out willy-nilly. So of course, there's going to be a trial. But with the normal prop firm, you'll still have to pay for your desk, and they'll call it paying for the feed. So you have to pay for an RNS feed and stuff like that, or a Bloomberg terminal and stuff. And so they range from anything from £1,000 to £2,000 a month, and sometimes it's a 12-month bedding in period. So you have to be able to pay the desk fees, as they call it. So basically, you're going to be 12 to 24 grand down over the first year, and if you make it, then they'll put you on a relatively low account. It could be 100 grand, and your percentage fee, performance fee from that, doesn't cut the mustard. So being a prop trader is good if you can skip all of that bollocks. So if you have a really good track record, and you can start off with a big chunk, like a £5 million account, all of a sudden it works. But finding those positions is really hard. So yeah, that's that. Reese, advice. Oh, don't like giving advice. For someone with a pot of risk capital at the moment, how would you split it up? I hate those questions because I can't give financial advice. I cannot. And I've been reading up on all the FCA type stuff because they're really trying to crack down on copy trading, people giving advice, all that sort of stuff. And there's such a grey area now to the point where I was chatting with an FCA solicitor, a specialist solicitor, and to the point where the FCA really don't like it if someone says, I can't give advice, but in my boots I would do this. They're trying to move the goalposts so that those sorts of answers are giving advice, even though like this is just like a chat in the pub. So I want to and I must remain squeaky clean. Like, I don't want to break any rules or laws. So it's tough. I've got to be, and it sort of sucks because there's like a billion YouTubers out there all going do this, but they're all in the crosshairs of the FCA. They're really trying to crack down on it. So if you got risk capital, it's completely your call. I know it's not the answer you want, mate, but you probably know what I'm thinking. Hell, I've just told you what I've done, and I'm it's common knowledge now that you know that I've got a fairly large percentage of my liquid net worth in crypto now because I don't see crypto as risky anymore. Volatile, yes, not risky. Stuart, 15 years ago I started a small drinks company, got into some supermarkets and looked promising. Okay, sweet. Here we go. First error, I love it. So, and this is still Stuart Roberts. The big mistake I made was not looking after my well-being and ended up having health problems, which is ironic, bearing in mind that I'm in the health and fitness space and it was a health drink. The takeaway I learned is it all means nothing if you lose your health. I so agree with this. It's health, but you're not alone, mate. I know so many people who have done really well in business. They've sold out, for 7, maybe 8 figures. But their health is a piece of poo. One of my best mates is having health problems at the moment, and it's scary. He's like 40 years old. He runs like 5 miles every day. Like, he lives on the coast, runs along the beach. He's super fit. Annoyingly, frustratingly good at golf as well. But he's having a health scare at the moment, and chatting with him, it puts everything into perspective. And I've got like 2 young kids, so I totally agree with that. But here's the thing, this is why humans are just slightly more sophisticated versions of monkeys, because we know what we need to do. Like, all of us, we all know what we need, but do we expend the effort in order to attain what we need? No, we don't. We don't. Let's take health. I'm the prime example here in terms of the health. I know I should be, like you, looking after my health more. Do I? Do I, hell. Literally, I guess I've always been relying on my Asian genes that I don't get fat. And I swear, that is my mini superpower, not that I can monetize it. I eat so much junk food, it's ridiculous. And I still stay thin. But I know inside I probably look like an 80-year-old in terms of arteries and stuff like that. So, yeah. In fact, Rob Morley, you're here. You're I don't know if you're still here because I can't actually see who's listening on the Facebook Live. But you've gone down the big health route. Can you share? Do you want to share what you're doing? Because obviously I don't know what is personal, what is not. But feel free to share what you're doing if you want. Raymond said, Siam, when will today's chat be available? Just joined and missed the ETH bit. This is being recorded, so I'll put it on the YouTube like straight after. So by sort of 5 o'clock it'll be on my YouTube channel. So that's that. Alexander said, can you please share your aggressive Kryptonian portfolio? I'm sorry, mate, I can't. It's too aggressive for the public. I've only shared that with my students because they understand context, and this is literally okay. So talk like this whole topic today. Is all about learning points, And I guess the learning point for me here is something which I learned in 2017, where people never understand context. Even if you ram it down someone's throat, they will not understand context. So when it comes to crypto, all of 2017, in my crypto video course, which is on YouTube, it's like a 60 video crypto investing course on my YouTube channel, totally free. Like so many videos I've said, rule 1 of crypto, only play with risk capital. Literally capital you can afford to lose, or even better, like a small percentage of your liquid net, of your liquid cash flow. So tiny amounts. Did anyone listen? No. And then and the other part of context people didn't get is that, like, what I was doing with my Kryptonian portfolio is I was waiting until I had a nice buffer of profit until it got 200, 300, 400% in profit. I then took out my seed capital, as in my original stake, and then with the remaining stuff I was then super aggressive with. So that's why I was dumping $50,000 into Tron. But again, I got into Tron at 3 cents or 2.5 cents and got out at 21 cents. Tron was an awesome trade for me. Yet people still berate me, go, "Oh, you're advising people to get into Tron." I'm like, I wasn't. So unfortunately, I'm not going to share my aggressive portfolio anymore. Just stick to the basic rules of investing. Don't play with what you can't afford to lose, and hold it for the long term. Seriously, play for crypto 3 to 5 years, come back, and then Raymond, yep, as a financial advisor, we can't even have a pub chat anymore because we can be taken to task and fined for giving advice if it's gone wrong. Yeah, so true. And it's nuts. So Stuart, yeah, you're right. Stress is the worst thing. So anyone here on Clubhouse have anything to add? Any learning points? Any massive errors that you've made in the past and you now want to share those learning points? Come on. I mean, I've got some horror stories which I can share. Hey, Jake. Fellow Norwich bloke. Hey, mate, you got the mic?
Hi, Siam.
Howdy.
So, staying on the crypto theme, I got quite excited by Masternodes.
Oh, yeah, that's a good example.
Yeah, so I set up a whole bunch of Masternodes and I made lots of additional cryptocurrencies, but all the ones that I did turned out to be really crap currencies, and so I was left with a whole bunch of wonderful profit that was worth nothing.
Yeah.
And there's a question that follows on from that. Is staking the same in principle as Masternodes? Is that the same sort of thing? Pretty much. Because some of the currencies obviously now that offer staking are proper mainstream currencies, like Cardano and Ether and Polkadot and stuff. So, and if so, is it a slightly safer option than it once was?
Yeah, so there's a couple of risk-reward seesaws here. So it's a really good question. So yeah, staking is, I guess, is a better / safer form of masternoding. For those not familiar with masternoding, don't worry, forget the term. Forget you've ever heard
about
it. Yeah,
it's a bad memory. I wish I could.
Yeah. So yeah, you're spot on. A lot of the coins that you're getting epic, ROI or APY because you're getting loads of coins. But what is the dollar value of them all, or the pound value? Bugger all, because they never moon. They never grow. So in terms of staking, I've probably got about $120,000 staked at the moment across Polkadot, which is doing, I think, something like 15% APY. Cardano is just a boring 5%. Now, and the good thing is with Binance, you can do it all, and you can pull out your stake whenever you want, with very little penalties, if any, which is good. So you're earning lovely ROI percentage-wise, and you can pull out if you want. Now, if you look at Ether, you can stake Ether. However, you're going to be locked up till freaking years, months and months. I think the minimum lock-in period is like 6 months, but it's most likely going to be more than that. And the yield...
So, here's an interesting one, Siam.
Yeah.
If you look at Cardano, you can do what they call delegation.
Yep.
And that's where you get your 4.5% or whatever it is that they're estimating. But you can also do a thing called running a stake pool.
Mm-hmm.
And they've got a calculator on their Cardano.org, which is suggesting that if I run a stake pool, instead of getting 4.5%, I'll get 771% predicted annual yield. Now that seems to be too good to be true.
Yep.
So why would their calculator be suggesting such a thing?
I guess we've seen a lot in the crypto world. All of these sort of calculators, you have to take with a massive swimming pool of salt. And nearly all the time they don't come to fruition. So for example, if you look at Ether, it's saying that you're going to get a rough yield of 9 to 10%. But as more people start staking Ether, that yield drops. So what we'll most likely see with Ether is that it will probably drop down to like 2 to 3%, and then before you know it, it's like no different than getting freaking divvies from big cap stocks. So I know I'm personally just extremely pessimistic or cautious with the whole staking stuff, and that's why I'm only staking sort of top 10, top 20 coins.
Yeah, so I was thinking that this staking that I would have a go at would essentially be the riskiest of my risk capital.
Correct.
And the thing I like about it is that it's technically hard. It's easy to delegate. You can just do it on Binance, but it's hard to set up your own pool, which will keep people away from it.
Yeah.
And the worst case scenario, I end up with a whole bunch of Cardano, which is what I've got anyway.
Which is it's like probably the most solid crypto out there. Cardano.
Yeah, for the long term, which I intend to keep that one for the long term anyway.
Yeah.
I'm not doing really risky stuff at all.
Yeah.
But I was thinking I might have a go. So I might have a go, and I'll report back what returns I actually get.
Yeah, do it. And the thing is, with extreme high risk stuff like that, let's say you do. Yeah, let's say you have a punt and you put $1,000 into it. If it makes 700%, whoop-de-doo. Then you can just reallocate
and
into.
If I lost everything, it wouldn't matter really. It's
exactly.
just that because it's Cardano, I shouldn't lose everything.
Yeah, and again, being a trader and investor, you should always be on the lookout for asymmetric risk to reward. So what I mean by asymmetric risk, you know this, Jake, but so asymmetric risk to reward is where you have ungodly reward in comparison to the risk. So what Jake is saying here is like what is the risk? The risk is one. What's the reward? 70 basically, or 700%. So it's an ungodly reward for the amount of risk. So it's worth having a punt. Now the interesting thing here again, which I think the public in general are not aware of. In fact, I'm seeing a few crypto investors here in the clubhouse. So I know some of you probably are aware of this. Is that when you're staking crypto, you are paid out in the crypto that you're staking, typically 9 times out of 10. So for example, if I've got a whole bunch of, I think I've got like 50,000 ADA staked at the moment. So ADA is the ticker, or the token of the Cardano network, just like ETH is the ticker for Ethereum network. So I've got 50,000 ADA staked right now, but in terms of ROI, yes, I'm getting ADA back at 5%, whatever. But the cool thing here is that you're also getting the PAG, and the PAG is the potential appreciation gain. So I may be getting 5% per year in terms of ADA, but if ADA starts rallying up massively and it doubles or triples, well, in real dollar terms or pound terms, your yield is way better than 5%. Does that make sense? I find it hard to explain that verbally, but I could draw it out on paper.
My verbal analogy is, imagine that you're somebody that owns a block of 10 flats.
Yeah.
You get a free flat, and that flat is worth whatever. So if you're one of these daft people that think property prices always go up, then you get the flat and you get the appreciation.
Yeah. Yeah. So, yeah, that's good. Cool. Any other errors, learning points, massive kerfuffles that you've had, and then please pop your hand up. I'll share one right now. I was talking about this with a friend the other day. So in 2015 2016? A long time ago. I wanted to set up a virtual reality arcade in Norwich, because there isn't a VR arcade in Norwich, and I thought, I could, get a massive warehouse, get 20 booths all done, and you can have all sorts of epic gaming, because there's some pretty cool games, like you can do VR paintball, which is fun, and there's other stuff. And so ultimately what I want to do is have that VR arcade, but really I wanted the ability, I wanted the capability. So I went on the prowl to try and buy a tech company. And I was really looking for tech companies with absolute wizards in them. Okay, so someone, with a full stack of devs, but VR devs, not just normal coders, VR coders, etc. And so I found a company in Norwich who, again, I'm not going to name names, but I found a company. I bought, was it 65 or 75% of this company? It was a mobile phone company, but the devs in there they had also built VR game. I was amazing. So not only am I going to get the capability, the VR capability of all this, I'm going to set up a VR arcade in Norwich. That'll hopefully wash its face and then fund the R&D. So I think ultimately I just wanted free VR R&D, because the world is moving to VR. It really is, for home entertainment, porn, gambling, all that sort of stuff. Not not getting into porn. Okay, so here's the thing. Now I think I sort of say is an error, and it's a learning point. So the error I made is that the director, the team was great, but the director of that company, oh my god, I don't know what happened to my squirrel sense, but she was a piece of work. And I probably shared that story where I said a business partner stole 75 grand and started using that money, my own money, to pay her legal fees against me. It's that deal. And so I think I bought the whole, I think it was like 75% of the business for 150 grand. Now this, I guess in hindsight, it was good. So she was really keen to get the whole 150 grand in straight away. And she kept on asking, when does 150 come in? But as part of the deal, with the deal package, with part of the deal, I was phasing the money in. So what happened is that we had a very aggressive spend curve, because we had to get this warehouse. We then had to get all the kit, etc. So we bought lots of kit. We were about to sign the lease on this massive warehouse, and so I put 40 grand in, or 45 grand in, and then I put another chunk in. And so I put 75 grand in very quickly, and that was, due to capex, or capital expenditure. And she was very, when's the next bit coming in? I was all, there's a schedule here. And in hindsight, I realised, she was going to try and steal the whole 150 grand from me. And in the end, she only stole 75 grand. And I managed to get, out of the 75 grand she stole, I got 40 grand back. Plus, I had to spend 10 grand in legal fees, so really I got 30 grand back. It's freaking ridiculous, that's why I have zero respect for the judicial system, or the UK law system. It's just pants. So I guess the learning point there, the learning nugget, is that if you are ever going to buy a business, don't chuck big lumps of capital in, but phase it in. But even better, just do the Nora method that I talked about in the M&A, in the 2 M&A chats. Because when I buy a business now, I don't put any money in. I do it via a call option. So any other learning points people want to send across? Or put in the Facebook group? Come on, share your skeletons. I've got loads of skeletons. Come on. Clubhouse is always full of tumbleweed for me. No? Okay, getting there. No? Okay, fair enough. So I think that's bringing us to half an hour now. I had a question from someone else with that I said I'd include. It's about Tesla. So the thing with Tesla, as you can see on the chart, in Clubhouse you can't see, but Tesla's dropped quite a lot recently. So luckily I got out at Tesla about $820. It then opened up today and dropped down to about $625. And I'm just about to release a video actually. But what I was saying with Tesla is that a lot of people mistake Tesla and Bitcoin together. They think, oh, you know, Bitcoin's going to do 50 to 80% drops, and so is Tesla. But it's not. It's a massive enterprise. It's a huge company with tens of thousands of staff. And so, in my opinion, this is purely my opinion, with Tesla, if there's ever like a 20-30% drop, that is one hell of a gift. And so today I've been frantically trying to get in on Tesla, but freaking Hargreaves Lansdown, just the world's worst stock provider, because, you know, even though the market's live and trading, they weren't giving live price quotes. They bend you over on the currency exchange. Yeah. So, yeah, I think I haven't actually got my fill in, because the price moved up like $50 odd by the time I could get the internet working and Hargreaves playing ball. So yeah, if it continues going down, I mean, it's great. But even now at $688, it's still a lovely, nice sort of bargain. It's a good 30 odd % correction. So yeah, that's it, folks. Oh yeah, Alex, I've just seen it. He said, I'm from that 2017 group. I understand the risk. Cool. Yeah, I guess, Alex, part of the aggressive thing is that once you've taken out your initial pot, as in your principal, then all the cryptos you have left are pure play money. It's complete free crypto. And so that is why you can be more aggressive. And so I still, with that aggressive pot, I do maintain some nice ones, but you can then start trying to double up on stuff, you know, chucking, you know, relatively large amounts on tinier or smaller cryptos, which, you know, are likely to double, etc. But yeah, enough of that. We've been here for half an hour talking. In fact, it's been a bit of a hodgepodge of topics here. Mistakes, crypto, and yeah. So Jake, thank you for your input. Very much appreciated. And I will see all of you lovelies tomorrow at 1600. Rightio. Toodles. Bye.